What's going on, guys? It is James here from Celestin Capital, and welcome to today's video. Today, I'm going to be doing an entry criteria video on how I enter and manage my trades, right? So, what I want to do is give you guys a back testing session, and I'm going to do this in the form of a back testing session. I'm going to back test GCAD and show you guys exactly how I enter into my trades. I'm going to be marking up my supply and demand zones, and then looking for within those supply and demand zones. I'm going to be looking for Wyckoff and or shift of microstructure. Again, that's all Wyckoff is shift of microstructure. Or you can consider it liquidation and mitigation of an area. You know, while some people see it as consolidation, we see it as Wyckoff happening. And we can position ourselves correctly to take advantage of the moves that happen within this manipulation or consolidation, whatever you want to call it. But again, we see it as Wyckoff. So again, I'm going to be showing you guys how I enter and manage my trades whenever I take a look at the markets. And so let's go ahead and get started with this video. And just so you guys don't think that I'm cheating, I'm going to close this all the way so I don't see what direction we're currently in. But what I do want to make sure is that I can go to a 5-minute time frame, because that's where I like to enter my trades, on the 5-minute time frame. I usually analyze on a 1 or 4 hour and look for supply demand zones on the 15-minute usually, and then confirm my entry or enter the trade on a 5-minute. So I just want to make sure I can go to a 5-minute time frame. So I'm just going to keep scrolling back and forth, and then we're going to use the replay tool right here. So September 2021, let's make sure I should be able to go to a 5-minute. All right, we're perfect, good. So let's start off by marking up structure. So as you can see here, structure is something like this, right? So we can start from here, and we've mitigated this area right here, and we're continuing to the downside. Now that we've broken this low right here, what can we expect? We can expect a mitigation of this zone right here, right, of the supply zone, and then a continuation to the downside to take out this low, which is in the form of liquidity. So that's exactly what we're going to be looking for. We're going to be looking for a mitigation potentially up here, or we can see these short-term mitigations right here of these supply zones. So let's go ahead and mark up our zones and see what's going on. So right now, let's see. For mitigations of supply demand zones, we have a demand zone right here that can potentially get mitigated. So if price hops into here, we're going to drop down to the 5-minute time frame to look for Wyckoff. And or we can look for the mitigation of this supplies. Well, the supply zone already got mitigated. I was looking for mitigation of this. As you can see here, price broke down and mitigated right here. So we can possibly, if price gets back up here, we can possibly expect some kind of reaction. But at the end of the day, we're expecting price to completely liquidate this supply zone and potentially mitigate some above here, some higher supply zones above here. So right now, again, we're more interested in this buy right here, looking for Wyckoff within this demand zone down here. Let's go ahead and play this out, see what happens. All right, so we've entered into the POI. So what we want to do is drop down to the 5-minute. So right now, again, we want to look for a shift of microstructure. We can see something happen, but not quite. We can't quite position ourselves to enter into the trade yet. Okay, so we've broken down. We've broken the structure high right here. We've broken the structure high, but again, not good enough for us to enter the trade. Got a mitigation. Look for more. Let's see what we get. All right, so as you can see, we have something like this, some form of liquidity, trendline liquidity forming. So we're taking out early buyers. Even though we're looking for buys, we don't want to buy into the market yet, just because we're expecting other people to position themselves into buys off of the trendline liquidity and put their lows potentially below here. And then if you watch my liquidity video, you can see that this is just inducing buyers to continue to buy this trend line and eventually take them out, stopping them out of their positions, and then continue to the upside. So we don't want to look for that quite yet, but we see something happen. We could potentially expect a mitigation of this demand zone right here. As you can see, we have this demand zone right here that I'm putting these lines around. So I'll probably, if you want to label this, you can do something like this: selling climax. We got the automatic rally up here. We've got the secondary test right here. And then the selling climax and secondary test get liquidated. We got an STB. And then we've got to break a structure to the upside, which broke this. As you can see, BOS up. So I'm pretty interested in this demand zone right here, this order block and or demand zone right here. It hasn't been mitigated. It was the cause of a break of structure, and so it looks pretty nice for us to enter this trade on. So we're gonna put our position down here. We're gonna keep our stop loss, just give it a little breathing room, just in case it wants to, just for spread, and make sure we don't get stopped out by spread. So we're interested in taking a buy over here. Again, you guys saw me. I did not cheat. I did not look at this beforehand. I'm just showing you guys how it would enter and how it would manage my trades. So let's see if we can get a tap into the market. Not quite yet. Let's see if this even happens. Tap in the line right here. So let's see. Okay, we're coming down. All right, so we got tapped in and we were stopped out immediately. So that's fine. That is minus 0.5. So we're going to do minus 0.5%. And again, not every order block and or supply demand zone holds, right? So that's what we need to get through our heads. Not every zone that we have holds. But the reason for our zones is to give us some kind of area to work with, right? Because again, as I mentioned in my Wyckoff video, Wyckoff happens absolutely everywhere. If we just trade simply Wyckoff, then we'll be very confused because we see Wyckoff over here, we see a distribution happening right here, a redistribution happening. If we go down to a lower time frame, we'd see an accumulation happening in order to buy up down here. If we go to a super low time frame, probably the second time frame, we'll see an accumulation down here in order to buy up to get to this high right here. And constant back and forth of the market, constant buying and selling of the market. And the reason we have our POI, or this order block, if you trade order blocks and or supply demand zones, is to have an area where we expect price to reverse from. So in this case, minus 0.5%. We're going to do this. Put this right here. Let's make this a little bigger. All right, minus 0.5. So let's continue looking. Continue looking. Okay, so we've broken structure to the upside. Let's see if there's anything left for us to enter on. Nope. No clean area for us, or for me at least, that I see. So we were liquidated out of our positions. We can see that the spring happened. So we can consider this to be a spring. And now we want to look for a test of the spring. So potential test of the spring. We got liquidated out and price continued in our direction. So we want to look for, let's see if we have something here. Potentially this, this swing low right here, but it was traded through and mitigated with this down move right here. So I'm not really interested in this right here, but I'm going to put it here just in case Again, I'm not taking a position. I'm just putting my line here to see if we get some kind of reaction at that area, if it comes back down. So it looks like we're breaking structure to the upside, breaking even more structure. Let's play this out. Okay, we've broken structure. Broken these structure highs up here. We have this swing low left behind. Let's see if there's anything in there that we can work with. Let's see. All right, so I'd actually like to get into this demand zone right here. So I'm looking to get in right over stops below here. 20 pip stop loss, a little too big for me, so I'm actually going to do a refinement of this zone. We can potentially do 50% of this zone, which saves us a few pips, probably 3-4 pips, but let's see. I would have been interested in this down move right over here, but as you can see, price traded through it and then came back down to mitigate it with this wick. So that for me has already been mitigated. But let's continue to see. Okay. All right, so price is continuing. We didn't get any reaction, nor did we want to position ourselves in for the first place. So that's fine. Let's actually go back and take a look at structure. All right, so we're still in our demand zone. Let's see what happens. All right, so all right. As you can see here, we have this impulsive move to the upside. And if we actually go down a bit, we see we have this unmitigated OB right here, order block, that we can position ourselves to get into. This order block liquidated this previous low over here, this previous candle, and it continued to the upside. So that's a nice confirmation for us. So we're going to get in on the tap of the zone, and we'll target this up here. Once I get tapped in, I'm going to show you guys how I manage this trade. 18 pips. We're going to put our stops down here. See if we get a tap into the trade. See if we get tapped in. All right, so we got tapped into the trade. All right, so we are currently in the trade right now. Let's get this over. So when price breaks this high right here, we're potentially going to look to go break even and partial, because the last thing I want to happen is for the market to head in our direction, for us to wait this long for a trade, right? For us to wait this long for a trade, for the market to tap us in, continue in our direction, expecting it to take profit, and then the market come back down and stop us out. That was ugly. For the market to go near or take profit, to come back down and take us out, right? You know, we want to make sure we secure at least some profits out of the market. So what I want to do is I want to break even and partial at this area right here. At the break of this high, I want to break even, right? I want to move my stops to where my entry was. So move this up here, and then, you know, it's a risk-free trade. The worst case is that we made a little bit of money. The best case is that it hits our TP and we make even more money, right? So there's no lose situation once we get to break even. So again, once the market crosses this, if the market crosses this high, what I'm going to do is I'm going to take partials, right, and then break even. So let's see if we get that. In this case, the market came close. We weren't able to break even. The market came close, but we were stopped out. That's fine with us. No problem. No big deal. Minus 0.5. Again, minus 0.5%. That's what we choose to risk on each trade. You can risk 1% if you want. The most I usually risk is 1%. That's the most I usually risk on a trade. Usually a day, actually. Usually a day. I'd either take two 0.5% trades, two trades worth 0.5%, or one trade worth 1%. And I usually don't like to go above 1%. So let's continue to monitor this trade. Again, we see price shoot up. I'd like to get in on here. Let me delete this. Still looking for buys. Our demand zone is holding. Do I want to... This looks like a nice impulsive move for us to get in on right here. This looks very nice. Right here. You can see... actually, no. I'm going to choose not to get in on that. Doesn't look too clean for me. So let's continue to monitor. Let's actually go back and take a look at structure and see what's going on. So we have this nice impulsive move, which for me broke structure to the upside. BOS up. Now let's see if we get a break of this high right here. If we get a break of this high, we're going to continue looking for buys. If not, we're going to change our bias and look for sales. BOS up, because this is the demand zone that we expect price to reverse from. And as you can see, it's currently holding up. It's just manipulating a lot in this area. And again, as I said, if we can position ourselves correctly, we can take advantage of the big moves, aka the mitigation of this supply zone up here to continue to the downside. So let's go back down to our 5 minute. Play this out, see if we get a break of structure of this high right here. Switch to 15 minute and go faster. See if we get a break. All right, we've got a nice break. Let's go ahead and now look for potential areas where we can buy from. So we've had this impulsive move down, or this liquidation and continuation up. We had the mitigation of this demand zone. Let's see if we go down. Doesn't look too clean, so I'm not going to take anything. I'm not going to force anything. Let's see if we get some kind of liquidation and push to the upside. All right, so let's see. So we have liquidation, push up. Can potentially look for mitigation of this zone right here and buy it up, right? So we have this down move that liquidated these lows right here. See this as liquidity. Liquidated those lows, and then an impulsive move to the upside. So we want to look for a mitigation of this area, of the zone. See if we get that. Play this like this. Let's see. All right. See, we came close. Let's see if we get a chance to get in. Still waiting. If price breaks this high right here, we're no longer interested in this area. We don't want to hold this area forever, just because, you know, if price move too far up, we know that if it comes down, it's most likely not going to hold the area. The area is not going to hold. So break structure up. See if we get a tap in. Nope, not quite. All right, so we've broken the structure high, so we're no longer interested in this area. Let's see. let's go back and take a look at structure once again. Again, a lot of manipulation, but that's fine with us, no problem. Let's see. See, our demand zone is still holding. All right, so we've broken out of our demand zone. So now this zone is no longer valid for us. So what are we gonna do? We wanna look for sells right now. So we wanna look for supply zones that are unmitigated, that could potentially be mitigated. And I currently see one right over here, this unmitigated supply zone right here. So I can position myself into here like this. Let's see if we go on a lower time frame, if we can find something that we can get in on. It's pretty nice. So we're gonna go ahead and do something like this. Stops above the high. Make sure we count for spread. And the next area we want to look to target is this low right over here. We'll look to target this low. Or if you want to go crazy, you can actually target this low over here, all the way down here. You can do something like this, target this low. So let's go ahead and drop it back down to our 15 minutes, see if we get some kind of reaction. Are we been tapped into the market? All right, so we've broken this low, or not yet. So we've broken this low right here. Again, just as a buy, we don't want for the market to tap us in and then, come back and stop us out. We want to secure some profits out of the market. So what can we expect? What do we want to do? We want to go break even over here. So we've broken the low, and we are currently break even right now. So this is a risk-free trade. Whatever happens, happens. Worst case is that we get stopped out and we've made some money. Best case is that it hits our TP and we've made even more money. But let's go back and see what kind of risk to reward we're looking at. We're looking at I made this way too big, 1 to 10 RR. So we've broken even at, let's see, 1 to, let's see where we're broken even at. We're broken even at 1 to 2. So if we divide it by 2, because if we multiply by 0.5, because we took half of our position off, so only half is left running. And this is a 1 to 2 RR. So if we multiply 2 by 0.5, it's actually 1. So we've secured 1 plus 1 RR for now. Plus 1 RR right now. And we are going to continue to partial along the way. Just again, so we're making sure we're securing profits from the market. All right, so let's go ahead. Oops, let me do that. Let's go ahead and drop this back down. Go to 2 hour. Target this low down here. All right, so let's see what happens. So our break even. Actually, play this out, let it go, let it ride. So if price breaks this low again, we're going to secure another partial. Another 50% partial. And it doesn't have to be 50% partial. You can partial however much you want. It can be 20%, 25%, 30%, whatever. Or you could have just taken your profits right here. But me, I personally, I like to think in terms of RR and not in terms of the dollar amount. I just think it makes more sense to me. All right, so we've broken this low again. So we've secured another 0.5%. Let's see how much that is. That's a 1 to 5 about. Yeah, 1 to 5. So actually, yeah, 1 to 5.3. So as you can see right here, 1 to 5.3. So 5.3 divided by 2. Let me calculate that really quick. 5.3 divided by 2, 2.65. So we've partial right here. We're taking half of our position right here. We took another half right here, so we have to divide 5.3 divided by 2 and then divided by 2 again. Or 5.3 times 0.5 and times 0.5 again, because we've taken two partials of 50%. So 5.3 times 0.5 times 0.5 again. That's another plus 1.3 RR. Plus 1.3 RR. And I hope you guys realize how just this one trade is making back our losses plus more, right? So we've already broken even on these losses, and we have some profits to go on top of that. Just this one trade alone. So that's why I like to think in terms of RR, just because all we need is one trade, to be honest. All we need is one trade. And I'm going to make an entire video on that, on risk to reward and risk management and how that works. So let's continue to play this out and see what happens. Again, we're break even. So if the market comes over here, we are broken even. All right, it's taking forever. Let's go to 1 hour. So again, we've broken another low, but we're not going to partial. We're going to let it continue to ride. See how far it can run. Because we're already in profit, 0.3 RR. So as you can see, we've broken another low. You could have taken another partial after this break of the low, but we're going to let it continue to play out and see what happens, see if it hits TP. So we haven't broken even yet. All right, so market has stopped us out at break even right here. As you can see, this push up. So the entire point of this video, the entire basis or the objective of this video was so you guys can understand how I enter trades, how I manage trades. As you can see, the first two trades we lost, right? And we were looking for Wyckoff. We were trying to look for confirmations. Although the market went our way, we got stopped out. And that's fine. As I said, if we can position ourselves correctly, in this case, we didn't. Second case, we didn't. But third case, look what happens. We position ourselves correctly. Our trading view is lagging right now. I don't know. It has some kind of issue with it. Let me actually cancel this out and go back in. Close. Let's go back. Back test. Let's go back to. All right. So in this case, first case, we weren't able to position ourselves correctly. Second case, we weren't able to position ourselves correctly again. But this third case right here, as you can see, if we can position ourselves correctly, we can catch the nice moves. And although it didn't hit TP, we ran to a nice 1 to 6 RR. Now, if you didn't take partials, it would have been a nice 1 to 6, which would have completely covered these losses and then some. But we were still able to cover the losses and then some. We just would have made a bigger, would have had a bigger reward if we didn't take partials. But again, if you don't take partials, things like this can happen. Our TP was all the way down here. It didn't come down all the way down enough to hit TP. Now imagine if we didn't secure any partials. This trade would have been, in my opinion, for no reason, right? We let the trade run all the way down here, which was 183 pips, just for it to come back and stop us out, right? Well, if you didn't go break even, it wouldn't have stopped you out just yet. But if you did go break even, it would have stopped you out, right? So that's why it's important for us to take partials out of the market, to make sure we secure something out of the market. Even though it doesn't hit TP, we want to make sure we are taking something out of the market, right? So I hope this video made sense for you guys. You guys were able to understand how I enter trades and manage my trades. And even though we were bullish at first, you can see how flexible we are with our bias, right? Even though we were bullish at first, we can see that the price broke through our demand zone. Price broke through the zone that we were expecting to hold. And then our bullish bias became a bearish bias. And what happened? We're able to capitalize on that bearish bias with this entry right here, right? That's beautiful. A nice risk to reward. You know, we were able to partial and make some profits. So again, make sure you guys are not trying too hard to predict the markets, but more so reacting to the markets. If your zones don't hold, it's not because you don't have proper zones. It's just because the market wants to trade higher, or, you know, it's seeking some other point of reversal. It's seeking some other area to reverse from, right? So again, these two trades were minus 0.5. This trade made us back those losses and then some. So again, I hope this video made sense for you guys. If you like this video, be sure to hit the like button. And if you want to ask questions, be sure to drop them down in the comment section down below. I hope you guys stay safe and enjoy your trading. Peace.